valuations, valuations, valuations. That's what we woke up to this morning. Things were okay in the pre-market session. We had a tough day on Friday on the Dow, a little bit of gain on the NASDAQ side. And that's the way we started off today. And then all of a sudden, before we knew it, we started to sell off across all broad-based areas of the market. And then the technology selling kicked in, and that's how we finished up. Here is the damage: a 557 loss on the Dow, 1.18%. Still nothing major percentage-wise. 36,590 was our close. NASDAQ lost 193 points, 0.84%. S&P down 62 or 0.92%. All right, here's what happened on the technology side. So NVIDIA, 1.88% loss, down $3.57. Stock moved lower to a close of 186.60. This came about after Peter Thiel, his fund, Thiel Macro LLC, fully divested itself of about 537,742 shares of NVIDIA during the third quarter. Now, NVIDIA will be reporting, by the way, this is a highly anticipated number. They will be reporting Wednesday after the close. So they dumped it ahead of time. Who knows what they may know that maybe the rest of us don't. All right, then we moved on to Apple. Pressure started on the stock in the pre-market session after we learned that CEO Tim Cook may step down as early as next year. Financial Times broke that story early this morning. Apple, which is a Dow component, $4.95 loss, down 1.82%, 267.76. Dell was down $11.28, 8.43%. Hewlett Packard down 7%. So that was the tech area. You get the picture. Then we move on to the consumer side. American Express, Dow component, $15.93 loss, down 4.46% to $341.25. They reported their October card metrics, which saw a 0.3% increase in consumer card loan write-offs, while U.S. small business card member net write-offs also increased by about 0.1%. Which those don't sound like huge numbers, folks, but as we touched on last week, this is the trend we're seeing in a lot of consumer-related loans. I told you about what we saw in regards to auto loans, how the defaults are starting to accelerate there. Corey and Dwight on Thursday talked about how the defaults are starting to accelerate on the home side of things. So as we have said over and over again, and many of you are probably facing this, the dollar's not being stretched, right? People are stretched thin. They're losing their jobs, unfortunately, and this is the result. So this is one of the things that, again, caught up to the stock market side of things today. Let's see. Google was one of our stars. We learned over the weekend that Warren Buffett's Berkshire Hathaway took a stake in the company. The stock went up $8.62, 3.11% to $285.60. In the big scheme of things, pretty small stake. It was about $4.9 billion price tag. That is small for both of these companies, but it was enough to move the stock. And that was, again, one of the few ones in the tech sector that was positive today. Then on the FOMC side of things, we had Fed Vice Chair Philip Jefferson, who is a voting member, basically said in a speech this morning that he backed last month's 0.25% rate cut, but emphasized that, quote, the evolving balance of risk underscores the need to proceed slowly as we approach the neutral rate. Here we go. So that weighed on the market again. I had another Fed member say similar type of things. Remember last week, towards the end of the week, we had a number of Fed members say the same thing. And Wall Street just looking at this going, okay, that likelihood is starting to slip away from us of that Fed cut. Brought up the new numbers right now, according to the CME FedWatch tool, we now look at a 44.9% probability of a 0.25% cut in December. Little change from Friday's odds of 44.4, but significantly a decline from about a month ago when there was over a 90% chance that we we're going to get that 0.25% cut. Like I said, just a little bit more of the same. So market valuations, concern about the Fed, same as last week. Concerns, same today.